Hello, everyone. This is Danielle. Welcome to the close. I'm in the close in the Simpler Trading Mastering the Trade room right now. And today I'm doing a dual live stream. So I want to start off by asking for requests. Let me know what it is you would like me to look at over the course of the session. Howdy, howdy. ARM. Yeah, I was just looking at that one because I was looking at my stock portfolio. And that was actually a ticker that I had bought, I don't know, maybe at the beginning of the year. Rocket Lab. Yes, that one is looking great. Netflix, Meta, Coin. The live stream is going on my X account and the Simpler Trading YouTube and on my LinkedIn. IREN, ACHR. Okay, well, let's go ahead and get started with those. I'm going to start off with the indexes first. So looking at the indexes here, just a little bit quiet, nothing too crazy is going on. We're seeing a little bit of a pullback after we hit 6802.75. So, I mean, first of all, it's pretty typical to hit a key psychological value like that, 6,800, and for us to pull back. So I don't think that there's anything crazy going on there. Pretty normal price action. We're just kind of down slightly. Now, I will say that this morning's action looked a little bit wild. I mean, for us to hit that key psychological value and then sell off pretty hard on high volume and high momentum is a warning sign that things are pretty toppy here. So, at this point in time, I will say that, we did get that momentum selling. That was a little bit worrisome for the longs because, I mean, the fact of the matter is that when the market's so extended to the upside, you don't want to have a ton of risk on because those kind of pullbacks can come pretty sharp and pretty fast. If you look at the put call ratio, it is low and it has been low all the way down into 0.44. So that does demonstrate that, people have a lot of calls outstanding. So when there's a lot of calls outstanding, you definitely get into this situation where we can get those sell-offs like that just seem to come out of nowhere. Because what happens is, if you wake up and the market gaps down, people everywhere are like, oh my gosh, I got to sell. I got to take profits. I don't want to lose the profits that I'm making, right? So then you end up getting these kind of cascading price movements. Now, this action did stop falling apart around 8:55 in the morning Pacific time. So, it's been pretty stable since then. Haven't really had anything too crazy. We'll definitely watch the market internals and see if there's anything too crazy going on here into the end of the day. And we'll also look and see if we can get any kind of end of day SPX trade. As of right now, I would say that the ticks have remained below the zero line for at least the last 30 minutes of the session, which, I mean, it's not super critical here. I'm not looking at it saying, oh my gosh, this is really bearish. But it's also not a great sign that buyers are coming in because, typically you want to see more tick action up above the zero line. Between the zero line and the plus 600 line, that would be ideal if you're getting any kind of buying going into the close. And that's just not really what's happening. We're just seeing negative tick action down as the negative 500s. So we'll see if this gets any more severe. More severe would be, negative 600 and below and actually staying down there. As of right now, we're not really seeing that because you can see that there's been multiple different spikes lower, but the ticks have not stayed at that range. So as of right now, somewhat stable, but you have a key psychological value here at 67.49. 67.50, and then more specifically at the low on the day, which is at 67.46 in the S&P futures. So if that low on the day breaks, that would be the spot that I would say, all right, It's the selling's probably going to pick up, and we might be able to get a day trade short on. Looking at the vol spread, I wouldn't say the vol spread is bearish, but it's not really bullish either. It is slightly trending lower. We have some red candles here, but it's not just falling apart. We do have the VIX that has traded higher throughout the session, so that's typical when you see the market falling. But as of right now, I would say, things are a little bit weak, but it's not truly falling apart, and it also doesn't look like a hands down short yet. Let's go ahead and look at the NASDAQ. So the NASDAQ did make another new all-time high, which is great. And it hit that key area of resistance and pretty much just fell apart after that. So again, you have that high volume selling this morning, but things have stabilized. So if you look at the NASDAQ, you can see that there's a 195-minute squeeze here, which is great. But at this point in time, we just need to have some buyers come in, and we just need to have some kind of catalyst to the upside. Yesterday, the major catalyst, I would say, was the AMD news. And then you also had Microsoft rallying and breaking out as well. So the Microsoft breakout was great. I've been waiting for Microsoft to break out for a long time. It's been in the squeeze since all the way back here, September 10th. So seems like forever. It's been a month, but seems like a long time. So looking at the way that this Microsoft chart has finally started to break out, and then the way that's pulling back today, I mean, I would have preferred, obviously, that it just continued exploding to the upside after yesterday, and that would have been a more ideal scenario for continuation. Instead, we're getting an inside range day, which, it's like, I feel like I've been waiting for this thing forever. And then it just hits resistance and it pauses. So moral of the story is I still like Microsoft. The 195-minute squeeze has fired, which is great. We just need this daily squeeze to fire, and another catalyst would be amazing. The main catalyst here is that we have earnings coming up. So if you take a look at AMD and just see what this one is doing after the big news yesterday, a lot of times when you have a ticker up 25%, it's not going to keep going up after that. So the fact that it's up today is a good sign, but it didn't break yesterday's high. So at this point, I don't think that this one is going to be good for continued momentum, at least this week. I still like the stock in the long term, and I still have overhead price targets. They're still quite a bit higher. So if you look at the weekly chart specifically here, and you say, all right, what kind of targets can we use? You definitely have a key psychological value target at 250, and that would be just above that previous high at 227. So I think it makes sense to use that price target. Then after that, you have your Fibonacci target at 367, and then another key psychological value target at 300. So long term, I still think AMD looks good to the upside. But since the momentum is not just continuing on here, as far as, breaking yesterday's high, I don't think I really want to get into it today. If I was already in it, then I would personally be scaling out and taking my profits, just because you don't really want to be in a situation where you have this great 25% move and then it just kind of rolls over. So looking at Netflix, I have been a little bit gun shy on Netflix. I don't like trading any stocks that are being boycotted. It just, I don't like trading stocks that are like in a negative news cycle. So it doesn't really matter, which side of the controversy you are on. What matters to me is, when people are actively boycotting and canceling a company, I don't usually want to trade their stock, because I just, when you're looking for technical patterns, you want to try to find consistent patterns. And when something has a negative news cycle surrounding it, it can really mess up your pattern. So for example, with Netflix, this ticker did have a great daily squeeze pattern. It was right up above the 50 simple, had a daily squeeze. The volume was neutral, but it easily could have broken out to the upside, especially going into earnings. And then, it got on Elon's bad side. So people ask all the time, like, how can you know if a squeeze is going to fire to the upside? And the answer is you don't ever know for sure, but you use your pattern and you try to overlap that with positive news, positive fundamentals, positive catalysts, like, for example, an earnings report coming up, especially if the ticker has done well over earnings. But then people also ask, well, why does the squeeze fire the wrong way sometimes? Well, sometimes you have Elon Musk like telling people to boycott it. So things like that just happen. And so I don't really want to trade Netflix here. Yes, it is up today. It is up 2.5%. That's great. It does have a squeeze. It does look like it could turn into a slingshot squeeze. But at this point, the issue is that it's underneath all of this technical resistance, and that resistance is at a key psychological value too, which is at 1200. So unless it can break out up above 1200 and really get going, I'm probably going to pass on that one. That one also has earnings coming up. Let me bring up my earnings grid. So Netflix hasn't done as well for the move going into earnings recently. Last quarter, they also gapped down after earnings. So they gapped down and rolled over. So that also wasn't helpful. So typically when you're looking for a ticker that you want to buy before the earnings report, you want to look for something that's had, multiple bullish moves in a row, particularly if you can get a breakaway gap. Those are the ones that generally work out the best for a run into earnings. It's because people say, hey, last quarter it had this huge move, so let me buy it before earnings this quarter. And with Netflix, we just don't really have that. So I'm going to pass on Netflix personally. Amazon has pulled back. They did have one news event, which was that they were shutting down. I think it was they were shutting down their Whole Foods in the UK. So I think that was the initial high volume push lower. But I mean, I love Amazon. I own it in my stock portfolio. I think it's a great time to buy more long-term stock because it is pulled back. It still has some pretty high price targets here. I mean, 265 and then 300. I was just looking at my stock portfolio before I came in here, and I was thinking to myself, yeah, I think this is a pretty good spot to be picking up some Amazon, because if you're getting in at 221, target 275, 300, I mean, that's some pretty good upside. I also have a position already in Amazon, and I've been working on building up a larger share position so that I'm in a position that I can sell covered calls on it too. So for all of those reasons, I think it's a good long-term stock buy, but I just don't really have anything for you in the options market, because now that it's underneath resistance like this, and it has earnings coming up, your earnings report is going to be on the 30th. So there's just not a lot of time. The one thing I was thinking that you could do is you could sell some put credit spreads at 215, because this is the 200 simple moving average and critical zone of support. So if you have that 200 simple moving average and zone of support, that is generally a good spot to sell put credit spreads. It's just it would have to be done for next week, because you wouldn't want to do it in the earnings series. And I don't really have a specific buy trigger. I would want to see some sort of evidence that buyers are coming in on Amazon, and I just don't really have that yet. So I like the ticker, I like the idea, but I would like to see some sort of confirmation that it's trading higher. Meta. So I do not like the way that this one broke down before earnings either. I'm hopeful with all of these names for this earnings season. And one of the primary reasons why I am hopeful that these companies will do really well is because they have pulled back like this going into earnings. it's really hard to make bullish bets on tickers if they're at a new all-time high going into earnings. And that's just not really the case here. Like we've seen most of these Mag 7 names pull back into these support zones going into earnings. And for the most part, they have done pretty well the last couple quarters. I mean, especially if you look at Meta, Meta's has these huge gaps higher quarter over quarter, typically rallies going into earnings. So I am still bullish on earnings for the most part, specifically in Microsoft and in Meta. Both of those companies did really well last quarter. Amazon and Netflix were a little bit soft, but I still think in the long term they'll be okay. But for Meta right here now, it's pretty similar to Amazon, where I think you could probably sell some put credit spreads at the $700 price point, just because it has fallen into support. It is bouncing a little bit, but like Amazon, it doesn't have a trigger. It doesn't have some reason to say, "Hey guys, it's bottoming. Let's get in now." It's just kind of hanging out there. So I would prefer to see some sort of reason to get in to buy this. So that's where I stand on those. Tesla, not really doing so hot today, down 4%. I really like the lower time frame chart on Tesla. You have to know if you trade Tesla that it's a bit of a wild one, right? So, it's a bit of a wild one. But if you look at the lower time frame charts, I mean, the lower time frame charts look really good. So, if we look at Tesla here and we go to the 195-minute chart, I think that it can still recover this 4% down day as long as it stays up above probably 420. I would say that's going to be my zone of support. I don't love how it's rallying into resistance at 450 and just getting hammered. I mean, that's really not ideal. But it does still have consolidation on this lower time frame chart. It is Tesla. It does have these crazy moves. This is not abnormal. So, so how do you put fibs on your chart and keep them there? Well, how you put fibs on your chart is going to be right here with this little guy right there. I don't think that I have any special setting to make it stay there. I mean, these are the settings that I have. So if you just draw a level on your chart and you right click on it, this will bring up the settings and you can set up your drawing tool, however you want, or you can just copy the way that I have mine set up. But basically what I like to do is I like to use the color red to show where the resistance zones are. So you can see that I have the 0.5, the 0.618, and the 0.786 areas that are outlined in red. That's because it's just a visual to tell you, hey, guess what? There's a critical resistance zone right here. And this is a spot where the price could stop. And as you can see on my chart, that is exactly where the price stopped, right at the 618 retracement level. And then I have the 1272 level, the 1618, and the 2618 level. Those are all green because those are the cash money zones. So I hope that helps. I'm not sure why, I'm not, the levels should just stay on your charts. I've had this set up for so long. I don't really remember if you have to do anything in particular. I don't think you do, but it should just stay on your charts. Tesla put wall still at 430. That would be a better question for Henry. I don't know if Henry's in the background. But overall, you know, ideally, some buyers can step in here with Tesla. Yeah, once you draw on the chart, there's no special setting. All right, so I'm still just going through here. Almanac shows today is the only bear day this week. Interesting. Yeah, I'm going to Orlando next week. So I'm going to miss you guys next week because I'm going to be flying to Orlando on Tuesday to go to the money show there. So I'm definitely going to see the Stock Trader Almanac, Jeff Hirsch, and we were going to talk about having him come in the room. So that'll be cool because he's awesome. The study with the time labels, the 8 days before and after earnings, that is called the earnings hot zone. So that one is a paid tool, but this grid right here, my regular swing trade grid, this is the one that's available to members in the trading room. And then this one is a custom developed, well, the other one was custom developed too, but this one's like a pretty high level earnings hot zone grid that demonstrates what the stock normally does in the 21-day time frame before earnings and the 8-day time frame before earnings, the 8-day time frame after earnings, how much it normally gaps up, how much it normally gaps down, the market maker move, and then the move that's priced in based off of the standard deviation. So, and then these colored bars are colored either red, yellow, or green based off of if that move was bullish, bearish, or neutral. So for Tesla, what you'll see here is that over the last 4 quarters, Tesla's had bearish moves surrounding earnings in the 21 days before earnings and the 8 days before earnings. This quarter, it did have a big gap up and rally after earnings. But this quarter, it was bearish before earnings for 21 during the 21-day time frame, and bearish during the 8-day time frame, and bearish after earnings. Then this one, you can see bearish before earnings, bullish after earnings. This one was mixed because the 21-day time frame was bearish, but the 8-day time frame, the stock went up, but then it fell after earnings. So what you're looking for is you just want to take a glance at the chart and you want to say, okay, is this a ticker that normally goes higher, lower, or stays neutral surrounding its earnings report? And because of these stats, that's what colors those bars right there. And so if you're looking at a stock and you're thinking, oh man, I really want to buy this name, I like this name, it just helps you if you think about the fact that earnings is coming up and that's a major news related catalyst. And what you want to look for is tickers that have a pattern of doing well near earnings, because now we're in October and this is the beginning of earnings season. So with Tesla in particular, I can tell you that it has not traded well surrounding earnings. Yes, there have been some random, huge moves like this one right here, this one right here. But for the most part, you can see how red it is. And that's because, there's been a lot of political issues with Elon. There's been a lot of, there have also been a lot of inflation issues, prices going up so high. So, you just have a ticker that just hasn't been doing very well surrounding earnings. But I will say that if you can capture the shift in trend, those can be some of the absolute biggest moves. And what we saw this quarter in particular is that even though it gapped down 6.8%, it has just skyrocketed. So I do think we still have the potential of trading this thing long going into earnings, even though you can clearly see it goes against what the trend has been, mainly because I think that there's a shot that the trend is changing in Tesla. Yeah, the Stock Traders Almanac You can go to Amazon and you can look it up, but it's basically a really awesome book that has a ton of stats. And it basically says, which days are more likely bullish, which days are more likely bearish. It has a lot of historical trends in there that we trade a lot. So we'll trade like a bullish move going into the July earnings season, for example. And then historically, November to like February are generally pretty bullish times in the stock market. So we'll trade that kind of trend that's in the Stock Traders Almanac. So anyways, yeah, super cool dude. We did a podcast together in New York. But yeah, here's the Stock Traders Almanac. So we use this a lot in the trading room. Okay, so what I'm going to do here is I'm going to look for the 230 trade, and then I'm going to get back to your requests. I still have multiple requests to go over. Let's see, ARM, Circle, Oracle, Coin, Rocket Labs looking great. I need to make a little bit more. I need to make some quicker progress here. All right, so basically what we do right around this time, 2:30 Central Time, is we're always going to look for what we call a 2:30 tick trade. So we're basically going to watch the ticks here to see if there's going to be any kind of extreme selling or extreme buying so that we could get a day trade on here and, trade this thing in some direction. Let's see. So far, we have a whole lot of nothing. Yes, I can share my short squeeze watch list. Dun, 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 dun. So negative 351 is basically nothing. You need at least negative 600 with sustained selling pressure in order to get a short on. And then the end of day rallies are pretty fun. So I always look for those. Generally when the market's down on the low like this, it's not very common that it's a short. It's far more common that the day traders start taking profits, the market rallies, especially with the market as it is. Because the market has been so strong, the dip buyers just come in every single time the market falls. So if I had to bet, I would bet it's a long rather than a short. But I also don't want to go long unless I have some reason to do that, which would be the vol spread shooting up, the put call going down, the VIX going down, the ticks hitting plus 600 and staying there. The ticks at least got back to the zero line. That's good. Still a whole lot of nothing. All right, well, I'm going to keep going over the requests then. I'll let you know if I see anything here. The one thing you can do if there's a whole lot of nothing is sell a neutral iron fly. That is a possibility. But you also don't want to do that if the market's going to start taking off. So let's just at least go ahead and take a look. So we usually do the day trades in the 0 DTE SPX. You can also use the S&P futures. You can use the spiders, but they're just it can be harder to get in and out in the options market in the spiders. I think the 0 DTE SPX is nice because it can just, if you can't get out or if you don't want to get out, it can just cash settle. So that's why we typically use this one. The index just does not have enough volume to really day trade it, especially in the options market when we do a lot of butterflies and spreads. It's just not really enough volume. So we typically use the 0 DTE SPX. Looking at this ticker right here, if it was right at 6,700, I would be more inclined to sell a neutral iron fly just because that's a key psychological value. And so you can sell a neutral iron fly when the indexes are stuck and there's just not any buying or selling pressure. It tends to work out better if you do it at a key psychological value. Let's just see what we have here. I think it's time to take profits on Rocket Lab, personally. I mean, at the very minimum, scale out. So if we look at our options chain with the 0 DTE SPX, we have a ton of volume at the 67.20 strike. So if we end up getting some buying, we might be able to do a bullish butterfly at the 67.20 strike because it has that volume there for just kind of a magnet. I don't really see standout for the 67.10 on the call side, at least, but there is quite a bit of volume on the put side. So, I mean, I think you could do the neutral iron fly and try to hold it for like 20 minutes, but it's just not something that is screaming at me like, do this, do this. So let's look at ARM. So, I mean, I'll tell you with this ticker, I don't love it just because of the overall pattern. I prefer to trade tickers that have a much better trend on the daily chart. So that's not 100% ideal for me. But I will say, it's up on the day. It's up 2.86% today. It has relative strength. It's pretty close to breaking out. You have a key psychological target at 170. So, I mean, there is still some room to run there. Yeah, and remind me of your request if I didn't get to it yet. The main reason why I was buying stock in this one is because of the long-term patterns. So I started buying the stock with this weekly squeeze right here. This weekly squeeze did end up firing to the downside, so it wasn't 100% ideal, but it has already recovered, and now we have another weekly squeeze. So I think with this one, for me personally, I mean, I think it looks great for a long-term buy and hold. I just don't love the idea of trading it in the options market because the pattern is just not that. It's just not really there for me. But if you look at the monthly chart, I mean, that consolidation is going to break out at some point. So that's why I'm just buying the stock. Because like go back and look at Google. This Google chart, this was one where with this monthly squeeze, I was just buying stock, buying stock, buying stock, buying stock. Boom. And then here's another monthly squeeze. This monthly squeeze right here, right around 145, 160 has just exploded. So, it looks great. Let me throw some levels on though, because I think that it has already made targets. The S&P is trying to go. We have ticks up into the plus 342. It's not really enough to to really get going, but it's at least going positive here. So if the tick action can pick up a little bit more, then we can start seeing that short covering rally. And then maybe get a bullish day trade on here. So then as far as Google is concerned, it is a little bit extended on the longer term timeframes, but it's been so bullish and it has a lot of relative strength. So I think that you could trade it long going into this earnings report. So, you could sell put credit spreads at the 245 area. I think it would be a little difficult to get a butterfly on here just because we're so close to this earnings report now. If it starts taking off, you could trade it long next week going into that options expiration and then the earnings report. But I mean, I think Google looks great here. So let's look at the options chain. So we have quite a bit of open interest at the 250 strike. It's just there's not a ton of room there to target 250. You only have, less than like $4 of upside. So there's just not really a lot of room there. But I mean, you could put credit spreads at the 245 strike. Oracle for a January debit spread. So, I mean, it has pulled back. You do have buyers coming in. You have a nice wick at the bottom of the candle here. I just don't really have a reason to buy it is the problem. I mean, I like to buy things if they have a weekly squeeze or a monthly squeeze or a daily squeeze or some sort of consolidation that's going to break out. If you stretched it and said, okay, well, you are consolidating into a daily squeeze. Let's try to buy that daily squeeze. I could maybe see that. Or you just want to buy it because the thing exploded and now it finally pulled back and you're looking for a long-term entry. I think that's fine. If it's a long-term, going all the way out into January kind of thing. For a short-term trade for this week or for next week, I don't really have a reason to buy it right this minute. But if you wanted to go all the way out into January, then I would target 350. And then after that, 366 and 400. Looks like Henry is buying AMD. ASML. Let's see. Emil says Home Depot, Lowe's, and RITL not looking so good. I literally just went into my stock portfolio and sold my Lowe's stock like right before I came in here. I was just looking at everything and I was like, this just is not, it's just not really doing anything for me, It's not something like ARM where it might turn into another OKLO or I had that in there because I mean it's a decent pattern and it has made money over the years, but it's just not that exciting. So I completely agree with you. ASML 1254 1400. The other reason why I wanted to sell the stock is because I've told you guys, like I bought this old house and I've had to fix literally every single thing in my house. And one of the things that I had to fix was the doors. And I thought, oh, where should I get the doors from? I'll get them from Lowe's. No, worst idea ever. Their sales guy came out here, convinced me that I needed like these custom doors that were a half an inch, different than just a stock door. And he convinced me that I had to pay like twice the price for these custom doors. And so anyways, I was like pregnant at the time and I just wanted it done, So I was like, all right, whatever. Custom doors, of course. This house has so many problems. So I paid for the doors. The doors came. Guess what? The custom doors did not fit. And they installed them and like they didn't fit. And I was like, this doesn't fit. So then they had to fix it like 2 more times before the door fit. Anyways, then they made me sign something that I like wouldn't talk bad about it on social media. It's like, really? And then I sold my Lowe's stock. It's like, I'm never buying anything from there again. No. So ASML day 2 pullback was very strong, 700 to over 1K. I mean, I see what you're saying, but I just don't. I hate buying something at like right at the high, And this one also it just doesn't have a great long-term pattern either. I mean, yes, it has recovered. It is right below the high, but it just doesn't have a solid trend with relative strength. So I think I would have to pass on that one. Yes, it is pulling back to the ADMA, but look at the pullbacks that the stock has. I mean, it could pull back way deeper than that. Okay, the SPX is finally going. Come on, baby. Let's get a move on here. Well, and I mean, the moral of the story is it's like you try to order something from a big box retailer thinking, oh, they're going to do it right because they're the big retailer and they know what they're doing and, blah, blah, blah. So I'm going to spend the money to have it done right because that's what I like to do. I like to do things right. And then, the contractors that I ended up finding on Nextdoor who are not even like door installers could have done it right for like 1/3 of the price. And it's like, I will never go there again for something like this, I don't know. And then I just look at the stock price and it's just like tanking. And like one of the main things that they complain about is that people aren't doing home remodels right now because inflation's so high and everything is so expensive. And it's like, well, yeah, people like me are trying to figure out, okay, I need this door replaced because it literally does not fit and bugs can walk right into my house. So what am I going to do? Am I going to go to Lowe's or am I going to, message a neighbor on Nextdoor who can figure it out and do it better and it won't take 9 months? So I don't know. Maybe that's why their stock price is going down. I figured it out for them. So I was thinking that we could do like a 67. It's just, look at this. The ticks they keep fizzling. So in order to get a good day trade on, you need to have more buying pressure than this. There's just plus 400 on the ticks. That's not really enough. And then it just kind of rolled over. So you really don't want to try to get long unless it's really starting to go because it's just not going to work, For years, Lowe's ProDesk had awful communication problems, multiple complaints. They never fixed it. We stopped using them in our construction business. Yeah, I mean, it literally took 9 months, and, like, they made me sign a contract, so then I couldn't even do any like, it was just yeah. Buy the next door stock. Take the hammer, go to Target, break in the cabinets to get the dental floss. All right, let me know if there's any other ticker that I missed. I know I missed Coinbase. Friend in construction had a customer buy custom doors. Of course, they didn't fit. Friend estimated that it would cost $30K to redo the entry. He said he could sell the doors and buy something else, but I don't recall the customer did. Yikes. Yeah, I just have an old house where like all the doors have settled, so they don't shut right. And like even the bedroom doors, like they literally don't shut all the way. So when you have babies that get woken up because the door doesn't shut all the way, makes for an aggravating mother, an aggravated mother. Let's see. So Coinbase is just another ticker that's hitting resistance and falling. It's hitting resistance at the 385, $400 price point. It is bouncing off the ADMA, which is good, but I just don't really see. I mean, if you're already in it, I can see trying to hold it a little bit longer just because it is bouncing off of the AEMA, but I don't know that I'd want to buy it here. I mean, there is a 195-minute squeeze. Henry's getting AMD. So AMD's trying to make another go for it. Looks like Henry's trading the 15-minute squeeze. I mean, Henry's really good at identifying these 15-minute squeezes. I just personally like to, man, that does look pretty good actually. What did he get? October 17th, 220 call. You could also do the butterfly. $10 expected move. All right, so I'll do this one. 210, 220, 230. This is just for like an overnight gap up. 210, 220 with a 15-minute squeeze. What delta do you use on call options? If anyone lives in the NYC metro area, I will do the construction at cost. Home Depot cabinets cost 24 to 30K. Got it done by a local guy for 12K in Atlanta. Exactly. I adjusted my doors when I first bought my home. So far, no good. So far, so good. No Lowe's or Home Depot. Try to find a lumber millwork for any needed replacements. Ask them for good carpenter's contact for any work you need. Thank you. Would you sell a put credit spread? Yeah, we can do that. To open, this is my take on the 15, 30-minute overnight squeeze. Looking for a gap up overnight. Aggressive overnight trade. And then as far as a put credit spread is concerned, yeah, I mean, you could do 212.50. The 210 probably doesn't have enough premium. 210, 205, that's just not a very good risk to reward. So 212, 210, that's a much better risk to reward because if you get $1.20 credit for a $2.50 wide spread, That is how you can get a 1-to-1 risk reward. When I first started trading, this is like literally all I did. I did $2.50 wide put credit spreads because I didn't have a lot of money. So 212, you could do like 212.50, 207.50. It's almost 1-to-1 risk reward. So I did go ahead and get out of my Rocket Lab. Rocket Lab exploded today. Really nice move. This one traded up into the 1272, and then it traded up into the 1618. So, it's one of those things where people ask, well, how do you make sure you catch the top? And it's like, you're never going to know, for sure. ACHR, this is one that I sold 2/3 of my position yesterday when it was up 15%, and I was tempted to sell all of it. But if you sell all of it, then you can't participate when it does, this, right? So it's just one of those things where you have to kind of decide, do you just want to take all the money and run, or do you want to be involved if it continues to explode? So in this case with ACHR, I made some really good money on it yesterday. Today, I'm giving some of that back on 2 of the contracts that are left. I feel like at this point, because it is down 9%, I probably should just go ahead and take profits on it, because what you don't want is you don't want the rest of that to then go to a loss. It's still up. I'm not making as much money on it as I was making on it yesterday. These are the 2 remaining contracts that I have. Yesterday, these were up like 150%, and today it's up like 60%. So it's definitely not as good as it was yesterday. But now that it's down 9%, it's just kind of losing momentum. Taking the rest of the money off the table in this ticker because it is losing momentum today. Also taking profits on Rocket Lab. I didn't post my Rocket Lab trade because I copied Sam. So I did not post an entry on that because I did it right when Sam was doing his, and I honestly didn't see if Sam got out or not, or what happened with that. But that's why I didn't post an alert on it, because I don't want to duplicate alerts when somebody else in the trading room is posting an alert. So okay, so let's just see what else we have here. Galaxy, this one just continues to go. This one has already broken through my $35 price point, which is great. But what else to do with it now? I mean, I don't know if there's anything to do with it now besides take profits. I mean, great move, great ticker. It's just one of those things where, wish you had more. Where do you get the alerts? So you can check out the link I just dropped in the chat. If you sign up for the trading room, that's where you get the entry and exit alerts. You sold Joby and bought AMD. Do I have any chance to understand this? So I know it's a lot. The trading room is like drinking from a fire hose. Like when we're in the trading room, we go over all the positions that we have currently. We go over some positions that some of our colleagues have on, because we see all of the alerts from our colleagues as well. And then we take as many requests as we can throughout our session. And if there's any trades, we'll definitely put them on. Today, it's a little bit light as far as entries is concerned. It you just never really know you can only trade what the market can give you, right? And sometimes there's a ton of entries, sometimes there's a ton of exits, sometimes it's a little bit quieter. Today's a little bit quieter. We want to focus on taking entries when we have a good setup. But this is basically our live, what we're doing right now. And then in the trading room, we do also have educational resources like Netflix, where you can go in and you can watch like class after class to better understand what it is that we do here. So we have I think it's called Simpler Showcase now, that basically I built out, and everybody on our team helped, where we created a lot of video content and classes to help people understand like the kind of trading that we do here. As far as snow is concerned, this ticker looks great. I'm sorry, I'm just getting to it at 12:58 Pacific time, but this ticker looks really good. You have a daily squeeze, you have a great trend. You are right up against resistance. It just needs a catalyst to break through this resistance zone, and then it would be up into 260 and then 272. BMNR. Oh, and then I also promised you I'd give you my short squeeze list. BMNR, what is going on today? Let me just look at Bitcoin quick. So, these tickers are going to move like this when you have Bitcoin down, with Bitcoin making a new recent high yesterday. Actually, that's the all-time high, isn't it? Okay. So with it making the all-time high again yesterday, it makes sense that it's selling off a little bit. But the thing about Bitcoin is that it has this beautiful bullish weekly squeeze. That weekly squeeze right there, I think that's going to take you up into 131,000, maybe even 140,000. So today, yeah, it's down, but I still have a long-term bullish outlook here. BMNR. This pattern was looking really good until it started pulling back. This is just kind of how these momentum stocks work. So when you lose momentum on a momentum stock like this, you got to be quick to get out and take your profits and take your money off the table. You did the 252 play and it worked nicely. Nice. What'd you do? Cisco. Yeah, this looks really good. I always appreciate everybody in the trading room for coming up with ideas. Like, I haven't looked at this Cisco chart in forever. I just haven't. I don't know. I don't really have a reason why, but it has a great weekly squeeze. It has a great daily squeeze. So you have an overhead price target at 75 and then 77.50. Whoops, don't want to do that. But yeah, this one looks really good. Lows blows. Well, I mean, look at the chart. It's like, I bought this one. I was buying it during this time frame right here in 2022 when it had a weekly squeeze, because that's when I like to buy my stock. And I mean, it's been okay. It could have been worse for sure. For a while it was looking pretty good, but then, over the last year, it just hasn't really done me any favors. So I just felt like I just wanted to raise some cash there. And I know that you guys have heard me more than once where I say I'm not really interested in investing in something that I don't that I don't have a good, like, if I don't want to spend money at the store and I feel like I don't want to use their product, I don't really want to own the shares. You know what I mean? So I like to buy shares long term in companies that I feel like, yeah, that's a really good business model. And the whole construction story, it's just I'm not the only one that's happening to. So, um, you know, down it goes. Joby. And then, yeah, let me share my short squeeze watch list with you again. I've shared this one in the chat in the trading room many a time. I'm going to share it in the alert box up above. Here is the link to my short squeeze watch list for Think or Swim. So if you can't find it, just go through and search in the alert box if you were in the trading room. And keep in mind that this is a Think or Swim watch list. So it's not going to open up in your browser. You have to open it in Think or Swim. So, and then also keep in mind too, that the short squeeze is not going to work very well when the market is down. The short squeeze is on fire when the market is on fire. There are some tickers, like I did this one on Charles Payne yesterday, RR. Iron's looking pretty good. That one's still up today. Hims is up today. SoFi, somebody asked me about that one. I didn't get to it yet. Rocket Lab was up today. RGTI has just been absolutely insane. This is one where, I'm glad I bought it in my stock portfolio. It's like I took profits on it in the options market, like all the way down here at like 26. It's like looking at it now and it's like, what has this thing? This is insane. I wish I could say that I held the long calls this entire time, but I didn't, because I took profits when it was extended and when it was getting stuck up here, and it just kept going. And this is exactly what a short squeeze can do. And this is also a good example of sometimes you just buy it and you just close your eyes and you just hold on. So that one looks great. TM, I'm still holding this one. This is a position that I have in the trading room. It's just not really doing anything today. It's flat. It still has a squeeze. It hasn't taken off yet. The upside target is going to be 104, then 112. So there's no changes to that position. SoFi. Man. So sometimes I just, I do the best that I can to get through all of the requests before the session is over. But there's a lot of requests sometimes and I just can't. Also sometimes I go off on a tangent. That's a thing too. But this one is, I would say, the best one that I saw today. So I'm a little sad I didn't get to it yet. And the market's closed now. But this one looks amazing. The reason why it looks amazing is because it has high short float. It has a squeeze. It has a perfect bounce at the 50 simple on the daily chart. I love, love, love a bounce on the 50 simple on the daily chart. I think this looks really good. And then the squeeze itself is slingshotting. So basically you have momentum that shifted lower and now it's shifting higher and it's, basically about to explode. So that looks great. We can look at it, first thing in the morning and see if I can get in. If you already got in, great job. If I was going to get in, I would buy calls in the earnings series, which is going to be into the 28th. And the calls are cheap too. So with these, I mean, you could buy the Delta 70s. I think probably these ones right here at the 26 strike. those are decently in the money, and it's good to buy in the money calls when a ticker is already up so much, because if it pulls back, it's going to hold its value better. But you can also buy these out of the money calls, because the thing is that if it explodes up through that price, those out of the money calls are going to go up very quickly in value and on a percentage basis. So I would say SOFI, and then I think it was SHOP that somebody else came up with that look really good for entries right now that I just didn't get to in time. Yeah, looks really good. Nice volume, nice momentum. And 13% short float. Okay, I'll add this one to the short float list. Anytime you have something with a squeeze plus 13% short float, plus it's up big and making new highs, that's exactly what you want to focus on. Okay, I'll look at one more, Upstart, and then I got to go. But this has been great. So that one is just kind of falling apart. So, I mean, I just personally don't like this kind of pattern. It's just all over the place. It's up, it's down. I like finding tickers that are in a trend and they have relative strength that go with the trend. So it's just not my favorite kind of pattern. It seems a little bit too low to short it. If you were going to short it, I would have said to short it around here, because that's where you have the head and shoulders pattern that broke and you had the squeeze. But at this point, it's already just died. And I definitely wouldn't want to buy it, because it's all the way, it's just, it's way far underneath resistance. I guess if you really wanted to, you could try to trade it back up into here, but that's just, it's just not really my jam. So what month for the SoFi calls? I would personally buy them in the earnings series, because the earnings is coming up, and that earnings series benefits from a rise in implied volatility. So if you can time it so that you're capturing the rise in implied volatility and the rise in price at the same time, oh man, and look at this. 2 breakaway gaps in a row. Dang. Okay, I'm going to post this chart for you guys, even though the market's already closed. So whenever you have a ticker that has a squeeze, short float, a bullish trend, and also these big gaps after earnings, that's typically going to be a pretty good confluence of signals. The earnings series is this one right here. So if it reports earnings on the 28th of October, you just look at your options chain and you say, okay, what series does the 28th of October fall into? And it's going to fall into the October 31st series. Does that make sense? All right. Well, I'm going to go ahead and get out of here, but I hope everybody has a great rest of your day, and I will see you in the trading room tomorrow. And for those of you guys who are on the live stream, if you want to go ahead and check out the link that I posted in the chat, basically you can come and you can join the trading room. And you also will get a copy of my swing trade grid. And that comes with the quarterly membership. So, you go ahead and get this exact same grid that I have. Or, you can just sign up for a trial too. And tomorrow I'm going to be in the trading room from 11 to 12 my time, which is Pacific time. And then again on Friday for this last hour before the close. So yeah, for sure. Went ahead and posted the link in the chat, but I hope that everybody has a great rest of your day. I will also be doing the live stream again next Tuesday. So, oh no, wait, I'm not doing the live stream next Tuesday because next Tuesday I will be on vacation because I'm going to Orlando, but I normally do the live stream on Tuesdays. Okay. All right. Well, I hope everybody has a great rest of your day and I'll see you next time.